Here is how the second largest bank collapse in American history occurred last week in only 7 minutes. Is the biggest financial institution failure since the 2008 financial crisis. Now, just 3 days after Silvergate Bank, the 16th largest bank in America, Silicon Valley Bank, was shut down by authorities and its activities were seized by the Federal Deposit Insurance Corporation. Silvergate and Silicon Valley Bank serve niche markets that were underserved by larger banks, but for regular customers, it's difficult to beat the convenience and safety of a big bank, so newer institutions are struggling to compete. However, another California bank recently announced it would be winding down its operations and liquidating. Banks like Silvergate and SVB had to provide their customers with services that JP Morgan or Bank of America don't offer. Since it began providing banking services to cryptocurrency users in 2016, Silvergate has experienced rapid growth. Other banks don't like this market because cryptocurrency is too frequently used for money laundering, fraud, and other illegal activities. Anti-money laundering and know your customer laws required banks to confirm that any of their customers' money was not being used illegally. Crypto was obtained legitimately. It is quite challenging and expensive for a bank to examine the money from a Bitcoin sale because it might have come from a well-timed investment, but it might have just well done so via online sales of illegal goods or one of the innumerable crypto rug pulls. A cryptocurrency exchange platform called FTX used Silvergate to hold its fiat reserves, and Silvergate recognized a gap in the market and was willing to fill it for a fee. The bank once proudly displayed a review of the bank's services by Sam Bankman-Fried on their homepage. But that has since been taken down. California claimed Silvergate is liable for advancing FTX's investment fraud and actively participating in it. Another important aspect of Silvergate Bank was the Silvergate Exchange Network, or SENE, which allowed institutional investors and wealthy customers to trade cryptocurrencies for fiat money. The issue at Silvergate was not the Bitcoin loans, which may seem stupid, but rather the crypto customers whose own customers no longer trusted them. Margin loans and fiat exchanges were actually revenue generators for the bank, but their trust depended on the cryptocurrencies. They loaned against not losing value. When Bitcoin fell by over 70%, it caused a panic we're still dealing with today. Billions of dollars worth of unbacked. During the liquidation process, to protect it in America, bank robberies are uncommon. Despite the fact that the failure of Silicon Valley Bank, a much larger bank that also failed last week but for different reasons, completely eclipsed the collapse of Silvergate, which is huge news, the root cause of this failure was a sudden and significant increase in interest rates. Which, yes, that part of a bank's job is to manage interest rate risk, and that didn't happen here. Although Silicon Valley Bank didn't have much experience with cryptocurrency, their offerings made them more competitive than traditional banks. They provided to Silicon Valley startups, entrepreneurs, as well as the bank was also a pioneer of venture lending, which is a type of loan given to early-stage, high-growth companies that can't get funding anywhere else because they are too risky. Most new businesses fail so traditionally. SVB was known as the investor's investor as they had a venture capital and credit arm that would directly invest into funds like Sequoia Capital, Ribbit Capital, Spark Capital, and Greylock, basically the who's who of institutional investors in Silicon Valley. Bank of Silicon Valley saw a gap to serve new startups. One of tech entrepreneurs preferred banking with SVB over the major banks for unmentioned reasons, including the excellent networking opportunities it provided. The bank route will hold hundreds of billions of dollars in deposits, primarily coming from their target market of new startups. When startups raise money, they would deposit it with SVB. Many of these new companies were not yet profitable, and some of them didn't even generate any revenue. So SVB would host client events where startup founders and venture capitalists would get to know each other and present incredible business opportunities to all parties. Was the only thing that allowed them to operate with more than $200 billion in deposits. Silicon Valley Bank's biggest challenge was putting that money to good use. The bank had conventional loan products like mortgages. But regular people had little reason to bank with SVB unless they were also startup CEOs, so that didn't make them much money. Their venture debt desk didn't bring in revenue. But they still couldn't give out enough loans for it to make much money. Whatever they had left over, they invested. The difficulty for the bank arose when interest rates began to rise to keep their deposits. They had to start paying Interest on the money that businesses maintain with them, or else those businesses would leave for other banks where they might earn up to 4% on the money that is in their company account. The bank collapsed due to costs on both sides of its balance sheet. It had to maintain interest rates for depositors, but it was also losing money on its treasury. Roku, the video streaming company, reportedly had $500 million deposited with SVB, which could have been earning them $20 million a year in interest. SVB purchased the majority of its treasuries between 2020 and early 2022 when the interest rates on bonds were very low. Treasuries are not very attractive to since they may acquire more recent bonds that pay interest, bond buyers. Increased yields since VC investment has slowed down and bank deposits have decreased. The bank was forced to sell its bonds at a loss in order to cover its losses if it needs to sell these bonds quickly. If this is the case, the bank should offer bond buyers a discount to make up for the lower rate that they will earn holding their subpar 2020 bonds. If this happened frequently enough and the bank was unable to call back its extremely risky venture loans, they ran the risk of not having enough cash to honor withdrawals. News of these difficulties were leaked last week by a group of venture capitalists looking out for the startup projects they were funding. They advised their portfolio companies to withdraw their deposits from SVB. This caused a bank run, and the FDIC intervened. A lot has changed as this video shows. Treasury and the Federal Reserve indicated that all deposits at SVB would be available Monday morning, meaning that depositors will be guaranteed 100 of their deposits instead of just the 250,000 insured by the FDIC. However, they also hinted that Signature Bank, which, like Silvergate, was a big depositor for crypto companies, had also failed, and that their depositors too will be made whole. Now this video is being recorded early Saturday morning of March 11th, and I believe by Monday morning the bank will open with a new name and deposits will be 100% safe. When banks go under, it hurts a lot of people. But sometimes for normal companies it's for the best. To find out why, go and watch my video on why good companies should not last